Good day, guys. Welcome back to another episode of Chat with UC. I remain your boy, Ochman FX. In this channel, we're going to be analyzing charts together. We're going to know the direction of the market, the direction bias of the market. I get to me. But before we proceed, I would like to thank each and every one of us that have been following up, that have been watching my videos, so that subscribe to my channel and even comment. I get to me. I'm really grateful, guys. So before we proceed, I would like us to say a brief prayer because we can't do anything without the Almighty. Okay, let's pray. Heavenly Father, King of Glory, the I am that I am. Lord, I thank you for the gift of life because everything you do without life, you're just wasting our time. Lord, thank you for life. Thank you for good health. May your name be highly be praised. And then we commit today's analysis into your hands. May your will be done. Take over. Give us the wisdom. Give us the understanding to navigate the forex market. In Jesus Christ's name we pray. Amen. Thank you guys for that prayer. I really do appreciate. So now we are going to be diving into our daily basis, our daily norms, our daily, weekly, monthly. Subscribe, like, and share my videos. Share to your friends, share to your family members. Are you getting me? Thank you very much. Okay, guys. On today's episode, we are going to be analyzing German 40. We did not analyze it in our previous video because we have some technical issues. So we are going to be analyzing it today to know the directional bias. Okay, so as we all know, German 40 is a very popular pair and is part of my watch list. I listed my watch list in our previous video, and we have gold, BTC, VEX 25, and German 40. Actually, I have GDP JPY, but the pair has been having giving me headache, so I have to remove it. So, so this is German 40. But before we analyze the pair, I would like us to go back to our previous pairs that we have been analyzing or that we have been working on. So for the past days now, I've not been active. I've not been active. I've not been feeling well. So, but I'm good now. I feel better. So thank you very much once again. So I think the last time we analyzed gold was here when it broke out this disruption. If you don't know that, go back to our previous video. I think that was our second video. Yes, gold broke out this disruption and it sold. Remember, once it breaks out the disruption, we are selling. I don't mean like we're going to sell till eternity, but some from period of time you're going to sell. So I caught some sales, one, two, I get to me. Using my entry here was Quasmodium reversal. Then the second was key level. For those of you that know about it. So then we have another destruction here. It gave us another destruction. Yes, gold gave us another inducement and disruption. I'm going to remove this for clarity purpose. So our normal routine, if you give us gold give us break of structure, two break of structures, then the recent break of structure will now be our inducement. Are you getting me? Then this is our disruption. So this is for last week. Automatically this week now, today is Monday, gold is bullish. Are you getting me? Gold is bullish. Our directional bias for gold this week is bullish. So gold is buying. So the market just opened, I think, few hours ago. I was active, I was monitoring this pair, but it did not tag us because I don't know the reason, but I will try and find out. If not, if I'm to refine my entries, I will do that. So, but actually, what I used there was Quasimodo reversal. I didn't know the reason why it did not tag me, but that's by the way. But I saw some people caught the trade. Okay, many people caught the trade. So I was now asking myself, what happened? Why didn't gold tag me? So, but now we're going to use um fair value gap FVG to enter re-enter. Okay, I've already marked out my fair value gap with my Fibonacci retracement. So here will now be our entry, and here will be our SL. Okay, so for those of you that know about key level, we also have a key level here. So key level in combination of fair value gap Fibonacci. Are you getting me? So we are going to wait for the retracement, then boom, we buy. So we are bullish on gold. Okay, so let's go back to BTC to know what's giving us. So since last week, that gold broke out to this disruption. I don't know. I cleared my chart. God. So, but what I know is that BTC is bullish. Okay, BTC is buying. So, I don't see BTC breaking out this disruption anytime soon. It's buying, 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 buying. We are in a buying season. Okay, so this was weekend. I think I did not. I opened a trade, but it's SL because I tried selling. Okay, I tried trading the um. I mean, I tried selling it from here, but as I said, once you are going against your directional bias, that's structural liquidity or order flow, automatically you are going to lose money. I lose the money here. I mean, a whole lot of money. So, because this is the weekend, and normally BTC normally sells on weekend. Sometimes it do buy. All this trade here now, I caught it on the weekend, so I feel like maybe the weekend is good for me to trade. But this time around, it did not go well. So we are bullish on BTC. As you can see, we are bullish. So what again? Verse 25. We have analyzed it. Yes, I think that was what we analyzed in our previous video, if I'm not mistaken. So these are our these are our first break of structure, and these are our second break of structure. For those of you that watched the video, I don't know if this was the recent one that I marked. I get him, I don't know. But what I know that this is our disruption. And when it broke out the disruption, as you can see, I used Fibonacci to minimize my SL. Boom. It went to our direction because automatically we are bullish. Once you know your directional bias, you are good to go. Are you getting me? You are good to go. So Vex 25 is bullish, and thank God that this is a living example. This is a life example of what I'm talking about. So I caught this by with using what do they call it? Key level. What do they call it? Transactional key level. That's previous key level. Then this one was Quasimodo reversal. That's what I used here to enter this trade. So as you can see, this I think about 1 to 9 is to reward, and this one was 1 to 5. So we are now here, the business of the day, German 40. We are trying to know the directional bias. I think we tried last week. We tried everything possible last week to know the directional bias of this pair. But I think TradingView limited us from doing that. So due to we are not subscribed, we did not subscribe to the premium version of TradingView. I think they are giving us hard time to view the past past document. I mean past, yeah. So we're having limitations. So here in German 40, I get me. As we all know, I don't want us to go down to 4 hour time frame. But at the look of things here, we have our first break, which is comprises of internals. I get me. It has many internals inside it. And this is the second break. It has a lot of internals. So as we are supposed to go down to 4 hour, let me try. I don't know. Supposed to come down here. First of all, let me clear the chart because so many of you we don't know what we are doing. So let's start from afresh. Let's start afresh. So before that, let me go and copy my template. I don't joke with that, please. Don't joke with this. This this is my weapon. Oh my God, these are my weapon. So we have copied it, then paste. Yeah. So here we go. So we are going to find our range circle. Then from finding our range circle, we find the internal liquidity, then transactional liquidity, then what again? Inducement and disruption. Please let me remove these internals. This internal is supposed to be change of. I don't know why internals can also be called um it can also be called change of character, if I'm not mistaken, or internals. Let me just leave it like that. Let me leave it like that. So I'll not confuse myself and you guys. So we have our range circle, and we have our internal, we have our transitional liquidity, internal liquidity, inducement and disruption. So now, how do we find our range circle? For those of you that have not been following our videos, this is your first time joining our channel or watching our video. Okay, so for us to find a range circle, for a range circle to be valid, it must have three or more externals. Okay, it must have three or more externals for it to be valid. So now, starting from here now, at the look of things, I'm just assuming, I get me, I'm assuming that these are our range circle. I'm not certain about this. So that's why I just marked it. Then after the verification of, like, to know whether if this range is valid, then before we can tag it as our range circle. So remember, this is an order flow of the market, the overall view of the market. Yes, this is not the recent view. I'm just, remember, I'm back testing and forward testing at the same time. Okay, this is a rare something. Nobody does that, but I'm doing it for you guys to understand the directional bias of the market. So do yourself a favor, subscribe, like, and comment the pair that you want us to analyze or work on. Okay, I have so many comments like in my social media, like my ex. You can also follow me in my ex, Ochman FX. So just comment the pair that you want me to work on or to find a directional bias for you. I can do that. Are you getting me? You can see here we have a lot of currency pairs here. We have a whole lot. So which I don't normally trade currency pairs. Are you getting me? because it's very spectacle um, and confusing. So and sometimes news, all those things, I don't like it. So now these, like, assume that these are our range circle, okay? Excuse me. Remember, we assume that these are our range circle. Are you getting me? So now, what are the things, the criteria for this range circle? Number one criteria is that number one criteria for finding this range circle is you must have three consecutive externals, three valid externals, not just consecutive. The externals must be valid, and for an external to be valid, it must have internal liquidity. Are you getting me? For an external to be valid, it must have internal liquidity. So now let's mark out our externals. So this here on first external liquidity, our second external. So just need one more. Then, and I'm not sure this is not valid. This doesn't have a internal liquidity, as you can see. It doesn't have, like, it has none. It doesn't even have one. So we are not going to count that as our external. So we also have another one here, another external here, then another one here. That's total of four. We have four external liquidities, like four consecutive external liquidity. So now we have identified our externals. Now let's know if these externals are valid, because not to just identify it. Are they valid? Are you getting me? Are they valid? So um we have our first internal, second internal. Remember, we said three consecutive external make one range, makes a range circle to be valid. See, we are assuming that this is our range. It's not valid yet, but we are assuming three consecutive externals makes a range valid. For an external to be valid, it must have internal inside it. So now we have identified our externals. So we are not trying to know if our internals are valid, okay? So we have our first internal, second internal, and the third internal. Even though this one now cleared all this, it's cleared it, but it can still count. And you get it can still count as internal. So this internal now is three. And you getting me? It's three. Even though that what we need is two, but it gave us three, so it's valid. I think there is more. Have another one here. But since you have gotten three already, there is no need. So this is the second one. The second the second external. Am I yes, we are correct. So the second external. We have our first internal. Our second internal here. Remember, we're supposed to be marking this out in our 4-hour time frame. Are you getting me? If you have been following us in our videos, we're supposed to be marking these internals in our 4 hour time frame. Okay, so this is the third one. This is the third um internal. Thank you very much. We are done with the second one. This is supposed to be another external, but it's not valid. It only have only one internal. So let's keep that. This one too is not valid. So we have another one here. So even this one is kind of confusing. So it's hard. We cannot really call this external. Cannot really call this external because it has a lot of consolidation. So we're going to call this one instead an external. Remember, this one has a lot of consolidation. It doesn't have breaks. It doesn't have valid uh, internal. So we're not going to call it an external. Sorry. So we have our first break here. For the This is for the fourth external that we marked because this but is going to be third because this one is not valid. Okay. So this will now be our second internal. Okay. Remember what we need is three internals to make up one external. So this is our second internal. And as you can see, it have structural liquidity inside it, and this one too have structural liquidity. So, so this is the third one. So as you can see now, this external is valid. All this external, excluding this one. This one now is not valid. So let me remove it. I'll remove it. So network. So we have our first external, second external, and the last but not the least, the third external that makes up this range circle. So I also like to tag these internals for easy recognition. Remember, I'm sorry about the noise. So now we are done tagging our internals. So what are we going to do next? We're going to mark out our transactional liquidity. Okay, this is supposed to occur in 4 hour time frame for easy view and cognition. So in this 4 hour time frame, you're going to mark out always that template, please. Gosh. Oh, I'm coming, guys. Let me go and So we are down to 4 hour time frame where we are going to mark our transactional liquidity. Then inducement will be on 1 hour time frame and disruption. So here we'll mark our first transactional liquidity being here. Second one here. The third one here. As I say, some people call these lower lows or higher lows. Depends on the one that you want to. Are you getting me? So I'm supposed to mark it to down here, but I'll just stop here. So now let's mark out our inducement and disruption. But that would take place in 1 hour time frame. Okay. Before that, let me tag these transactional liquidities. Okay, nice one. So we are going down to 1 hour time frame to find out our inducement and disruption. That's where we know whether this market is bullish or bearish. Okay, the direction of the market is now going to be identified. Okay, all these ones we have been doing is just for to know the order flow of the market. Now we are going to know the directional bias of the market. So remember the criterias. Two breakup structures makes inducement and disruption. Okay, so here we have our first breakup structure. What makes up a breakup structure? What makes this breakup structure to be valid? It has structural liquidity inside it. Are you getting me? This is called dual structural liquidity. So if you want to know more, you can contact me on my social media, any of my social media, be my X, my email, all of them are in my channel here. So, and this is the second one. This one to have, but this is called series structural liquidity. Okay, but this is dual. The another one here we have. Sorry. So we have our disruption here. I'm coming. I'll explain that. And we have our inducement here. Remember, what makes this inducement to be valid? We said two breakup structures makes an disruption, like validates a disruption. So now we have our first breakup structure, our second breakup structure. The recent breakup structure is what we use as our inducement. Okay, the recent breakup structure, that's what we use as our inducement. Then here is where we mark out our disruption, because these two now validates this one. Then the most recent breakup structure is our inducement. So thank you very much. If you see what's happened here, this same thing happened on gold. I think in my second video, I get me. It happened. I don't know, but I remember it occurred. Let me go back to gold and find out, because everything is recorded and detailed. Same exactly. Yeah, have you seen it? This place now, gold did not break out with the body. Did not break out with the body. So that means that this market is still bullish. Okay. It didn't, as you say, it broke out with the body, then we are selling. But it did not break out with the body. Until it broke out with the body, that's when we started looking for sell opportunities. Okay. So back to business. Now, it's This did not break out with the body of the candle. Many people will now assume that this market have changed direction, that is now bullish. No, until it breaks out with the body. And as you can see, it happens. I took this trade, okay? I took it. This today is Monday, ba. Today is the like market open today. It broke out with the body. I started buying. Yes, I took this trade here. So I always like to show emphasis and examples. This is a break. It's breakout. I took the continuation using key level. This is an entry model key level. I used it for the buy, and I'll be buying until it gives me another inducement and disruption. This 1 to 4 this 1 to 4 now. Are you getting me? I'm also looking for an a re-entry here, another entry here. Okay, it's too wide because there's another key level here. So I'm also looking to continue the buys, like to continue buying, which is not. Please, this is not a this is not a financial advice. I beg. So you can take the trade. It will not go well. Don't say that it's my fault. Okay, I'm just giving you my expectation of the market. So you can do your back testing and find out what works for you. So I'm looking to continue this buying from this level. Okay, so people call this order block. So people call it many things, fair value gap, but this where I call it key level. I get me. If you look here, if you look down here, what's there is order flow like underscore key level. This is my how I trade. I'll find out the order flow, whether the market is bullish or bearish, starting from the daily time frame down to 1 hour time frame. Then I'll trade my key levels. A failed key level is automatically converted to Compasmodium. Are you getting me? Are you getting me? So thank you very much. And please don't forget to like my videos, subscribe and share to your friends. Okay? It's very necessary. I'll be dropping videos like this on a daily, weekly, monthly basis. So remember what I said. Until it breaks with the body of the candle, the market have not changed direction. Okay? But I would like us to wait some little bit time, but we don't have much time. I would have liked us to see how this market plays out. Okay? But let's see. Now let's tag this thing inducement, um first break of structure, second break of structure, disruption. So as you can see now, it's going it's going to our it's going as planned. I don't know. I just hope that I'll update you guys on my X. I will post it on my X account. For those of you that might want to see the results, I will post it. Even this one, I will post it too. So, so here we are. So German 40 is bullish. Okay, this pair now is bullish. For those of you that are looking for how to trade, you can now continue looking for your entries. Like continue buying. Okay, you can continue buying until this market or this pair gives you in. Sorry, I'm sorry about the noise, please. This market gives you inducement and disruption. Are you getting me? Then you start selling. Don't know if you understand what I did here. If you don't understand, let me explain. As this market is buying, as this market is bullish, until it gives you inducement and inducement and disruption. These are our inducement and these are our disruption. Okay? Until it gives us something like this is our first break and this is our second break. Until we see something like this, we are not selling for any reason. Unless you want to counter trade, you want to go against the trend, which that one you are risking your money. Normally trade is a risky game, but you are risking more. Okay? So until then, until we find something like this, we are not selling. Okay? If we find something like if the market breaks the disruption, then we are selling. I think this diagram explains what I'm trying to explain. So now this market is bullish. Is bullish. Okay? So please don't forget to like, share, and subscribe to my video. I remain your boy, Oshman FX. Go to my social medias, my X account, Ochman_FX. Okay, I really appreciate those of you that have been following up. It's a very big privilege for me to be analyzing for you guys. Okay, and don't forget to drop the pair that you want me to work on to find the directional bias. Just drop it in the comments section, and I will look into it and we will work towards it. Okay, thank you very much, and may God bless you.